Welcome to the Market Edge Tech Talk with Will Pauly and special guest David Blake. We're going to review the market conditions of the past week as well as longer-term trends from a technical perspective, take a closer look at the major indices, and to wrap it up, dig into a handful of individual stocks and ETFs requested by subscribers. If you have questions or want to submit a stock for next week's webinar, email us at support@marketedge.com.
Welcome to the Market Edge Tuesday Tech Talk, our weekly webinar featuring the doc, David Blake, and myself, William Pauly. I'm a developer here at Market Edge, and for those of you new to Market Edge, David is our in-house technical expert. The purpose of these webinars is to help familiarize you with the site, how to use the wealth of tools supplied to you with our subscription, review the market conditions over the past week or so, as well as taking a deeper look at the questions you've emailed or called into our support desk. If you have any questions you'd like answered, please email us at support@marketedge.com or call us at 1-866-MKT-EDGE. That's 1-866-658-3343. All right, David, so what's been happening in the market since our last Tech Talk? I think it's been 2 weeks?
Well, yeah, it has been. Basically, the letter last week we talked about forget about the summer doldrums. We had a quite volatile week last week, highlighted by the trade tariffs. We saw the Dow Jones extend a losing streak to eight straight sessions. We were down big yesterday on Monday, so we've been down 9 out of 10. Last week was the worst weekly percentage performance since March for the Dow. But we're getting some conflicting signals currently. The technical condition of the market is very mixed at present. The S&P 500 continues to have positive momentum. Yesterday it stumbled a little bit. We were holding support at 2740, and yesterday we broke that, and we went down to I believe it's the 100-day moving average, which was 2702. We bounced off of that and came back up. I think we finished a point above the 50-day moving average for the S&P 500. Now the Dow has been struggling below just below its 50 and 100-day moving average. Yesterday we came down. I believe it almost may have nicked the 200-day moving average. That's the Dow's being weighed down on these trade talks, especially the large cap multinationals, stocks like your Caterpillar, your Boeing, General Electric, Intel, some of the week's biggest losers, and they continued down yesterday too. Now we are getting a little bit of a bounce back today, but we'll see whether that holds. But as far as the technical condition of the NASDAQ and Russell 2000, they're showing positive divergence. They're outperforming the big boards, and that actually is supportive of higher prices in here. I think we may get a little bit, the market still is susceptible to maybe one more downturn in here. We'll have to see what today turns into. But on the flip side, should we get some confirmation that from the administration that the trade talks are being worked out gradually, I think the market is set up for we could have a 400 or 500 point update in the Dow Jones.
Excellent. So we've been wading into some murky waters a little bit. What can you tell us about the major averages? Can we pull some charts up here?
Yeah, I want to go over on the homepage here to the market recap. If you click on this, it's going to give you some graphs and charts that I look at basically every day, just to see the shape of the market. Here you're going to get the major averages. Here's the Dow. As you can see, we broke below that 50-day moving average. NASDAQ still plenty above it. It's got to go down to about 7,400 before it's going to start to show some breaking down. Here's the S&P 500. Broke below its 50-day yesterday. The Russell still positive. Transports is a little bit concerning to me. We just keep getting weakness in the especially the airlines and trucking stocks as the price of energy or crude oil goes up and been holding up above $65, $66 range. That's been really whacking some of the transport stocks. So we want to keep an eye on that. It's trading below the 50-day and the 200-day moving average right now. Utilities, you're seeing a flight to safety while the trade tariffs and stuff get talked out. But what I want to show mostly is some of these charts down here. I talk a lot about internal breadth on the daily market. Okay, I want to show you these the advanced decline lines for the NYSE and the NASDAQ. What these are showing is a nice accumulation of the underlying stocks that make up those indexes. Now, while the market's been going sideways to down here for the last couple of weeks, you can see we're not getting a breakout to new highs on the AD line, but you're certainly not getting much of a breakdown. Same with the Nasdaq. You've had some selling in the big cap winners. A lot of the FANG stocks the last day or two have gotten sold off. You know, when people get a little bit nervous or worried about what the market's doing, they're going to sell off some of their the winners they're a little bit pricey in here. Now, also on this market recap, something I look at is you want to see how many stocks are making new highs and new lows. Ideally, you're going to watch, as you can see here at the beginning of the year, we have an expansion in the number of new highs on the Nasdaq and the New York. And you want to see this expansion, which means there's more and more stocks breaking up to new highs. Okay, this is a little bit troublesome. As much as you'd like to see the accumulation in the above chart, you know, with the AD lines going up to new highs, this you don't want to see. You don't want to see less and less stocks making new highs. Even though some are being accumulated, you want to see this expanding and not contracting. So yesterday was the first day, I believe, both of the NYSE and the Nasdaq had more new lows and new highs in quite a while. Some other charts that are on this market recap that you may want to watch. Here's the CBOE index, the put-call ratio. As you can see, we're kind of neutral right now. Actually, they're still buying calls when the market goes down, which is kind of a bearish scenario, because when it starts to get this extreme levels down here, it's usually a sign that the market has already reached a near-term peak. Now, you're also seeing yesterday a big spike up in the VIX. We actually hit 19, I don't know, I think it was 1961 yesterday. Today, we're kind of pulling in a little bit. When this thing gets above 20, it's a little sign that that the market's starting to get a little bit more fear is starting to come in. Also, on these charts in the market recap, you'll get yourself the weekly bullish and bearish advisors. We're in neutral ground on the bullish advisors. That's pulled back just in the last week or two. Okay, and if you look over here at the weekly bearish advisors, you can see this is down here around 17.5 or so. These are contrarian indicators, and when you don't have when nobody's bullish or no one's bearish, that's usually a sign that we could be nearing the top also. So we'd like to see this, people get a little bit more fear in there. We don't want to see this come back down into the neutral ground, which it has. So those are some of the charts that I look at that you can look at yourself every day on the market recap, and I think they're definitely worth checking out at least once or twice a week.
All right, excellent. Are there any sectors of the market that you have any particular concerns about right now, David?
Yeah, well, a couple. One of the main things that's been bothering me right now is I'm going to go over here to the XLF, which is the ETF for the financial sector. It's a spider, and in a rising rate environment, which we have. You want to see the yields going up, and you want to see the financials actually beginning to lead that sector. We can see over here right now with the XLF, you can draw in a descending trend line, which is not what you'd be expecting, but you can also draw a support over here. So you have this little bit of a descending triangle pattern, and today we're down again, where you see where this line is being tested again by the financials. Now, the problem with the financials is that the reason we're seeing this pullback is because of the 10-year Treasury yield, which was 3.1% back in April, May, has pulled back to 2.86, 2.87%. On top of that, you have a yield on a 2-year climbing to 2.55. So we're getting a lot of a narrowing of the spread, the yield spread, rather than the expansion. I would expect to see the yield on the 10-year start to move back up towards the 3% to help that would help the banks with their earnings a lot. So we've got to get rid of this narrowing yield spread before we're going to see a pickup in the XLF or the banking stocks. Okay, we're close to having an inverted yield curve, which historically has been a precursor to a recession. So a lot of traders and technicians are going to be watching the yield of the 10-year to make sure we don't get an inverted yield curve, which I said historically has been a precursor to a recession. At the pullback in the 10-year is telling us, that, though, is that some traders may be looking for a slowdown in economic growth, or perhaps maybe even a lack of confidence in the current administration. But whatever the reason, as a technical analyst, we just concern ourselves with the chart. And when you see this narrowing occur, you just don't want to be in the financials. I've been saying how long here that you would buy on these dips back here, but if this doesn't hold this support line here, that's going to be another bad sign for financials, which would mean you may want to begin to lighten up on those positions. But that's what has me most concerned in here right now. If we do find support in here, we can get a bounce off of this. It would be a bonus for the broader market.
And going forward from here, what do you see?
I would look. I think we're still going to have some troubles faced with these headwinds with the. Bring the Dow Jones up again. With the headwinds with these trade talks and tariffs, it actually is slowing down. You can see here the Dow Jones is testing the 200-day moving average. We actually we may get a pullback. I think the whole market's susceptible to a little bit more of a pullback, and we may get some the S&P 500 testing the 200-day also. Along the Dow Jones Transports is below it. But on the flip side, again, this is talking about the mixed signals we get. If we could get some clarification on the trade talks or tariffs, where everyone decides, okay, we're going to make some changes, I think you can see the Dow Jones, spike up 400 or 500 points and possibly make a run towards the old highs. But again, until we get off this limbo with the trade talks, I think we're going to see a market that's going to go sideways, very volatile. We're going to be starting to have more of these 200 and 300 point days. And but I think you can buy the dips when you have these days where you get down 400 or 500 points, and just wait for that for the trade talk stuff to
wait for the trade talks to sort of clear out. Clear up.
Yeah.
All right, now it's time to move on to some Custer questions. I see a couple of our subscribers have sent some stuff in for David to look at. If you have any questions that you'd like answered, you can call us at 1-866-MKT-EDGE. That's 1-866-658-3343. And just tell anyone who answers that you have a question you'd like answered on the next webinar. You can also email us at support@marketedge.com. Just make sure to include a little sentence saying you'd like your question answered on the webinar with your email. So the first question we've got here is NVIDIA, NVDA. Let's see.
Okay, NVIDIA's had a heck of a run. Great earnings. What you're having here is, again, part of the trade talks is killing the multinationals with NVIDIA. And semiconductors, some people think that the semiconductors may have hit their peak growth and maybe due for a pullback. But with NVIDIA seems to be in the IQ space and all that, and I think that it should be fine. I would probably recommend watch it a day or two in here, and I think you could buy it at that stage. We have a let's see what the second opinion is on that. Okay, we're still long the stock with a score of -1. So you can buy this dip down here. You're getting some technical deterioration, but the stock was a little bit overbought before. And again, this is a stock where if the trade talks get some clarification, you can see NVIDIA make a run back to its old highs.
All right, excellent. And our last question here is BAC, Bank of America.
Bank of America in the financial sector. You can almost draw the same trend line in.
That little triangle.
Where you come down like this, and you've got this, the sideways move over here. I would not, I look at this. I would expect to see you just keep your eye on the 10-year yield. If that starts to push up towards 3%, then it would be time to go back into the banks. Until then, I think you just you wait and see what's going to happen with the yield curve. Because if we do get into an inverted yield curve, that's bad for financials, and you'll see lower prices on the bank stocks.
All right. Well, I think that's all we have for today. So you can tune in next week for our next Tuesday Tech Talk. Thank you.
Thank you, Will.
You guys have a good week.